Millennials have a chance to make a lot of money in a Great Depression. Gen Xers do too, but you got to plan to write. My brother and I wrote a book. We've talked about this. I'm not going to spend any time because time is already flying on us, and I want to talk about the good things. When we look at banks lending, they have so much cash they don't know what to do with it. Interest rates need to go up. Bankers do not like to talk about this, but anytime you have a candid conversation with a banker, you say, what will you do when interest rates go up? The answer is, I will lend more because the risk-reward relationship is in play. Right now, banks have $1.8 trillion in excess capital reserves. So that means that they will be able to lend a whole lot of money into the economy. They will lower their credit standards as they do so, as much as Dodd-Frank will allow them, and as much as Basel III requirements will allow them. Their cost basis is going up, so they also need higher interest rates. They will pass along those costs. They will lend more, and it's good for the economy. 1.8 trillion, to put it in context, is the size of the economy. It's larger than the economy we call Canada. So we have lots of cash. Common terms, that means we could pay cash and buy Canada. That's what I'm telling you here, especially if they kept Newfoundland. We're going to talk about all the other stuff as we go along. Manufacturing is doing well in this country for those reasons there. You can read, so I'm not going to read those 5 reasons. But I just wanted you to know that when you talk to somebody who says we don't manufacture anything in this country anymore, you're talking to somebody who has no idea what the facts actually are. We're only 3.8% below the record high we had before the Great Recession. And as the next year unfolds, we're going to go back to that record high. Manufacturing in this country is doing well, thank you very much. Furniture, plastic, textiles, machinery, high-tech, low-tech, all kinds of things made in this country. The cost basis of manufacturing in the United States now is only 5% more than the cost basis of China. And so that's bringing a lot of business to the United States. And if you're wondering why people are going to Mexico, it's because the cost basis in Mexico now is equal to the cost basis in China. So the reason to go there is rather strong. The reason to stay here or to bring things back is also rather strong. We're doing fine. That's good news for the future and leads to my optimism. When I look at defense spending, if you are selling into defense contracts of any kind, the orders above year ago levels means good things. As you go forward, you're going to find more opportunities in the year to come, especially if you're tied to aircraft parts, that sort of thing. You're going to find more and more business as you go through the next couple of years. I have the presidents there, so you can see that it makes no difference on the presidential affiliation. If you're thinking a Republican win means naturally we're going to spend more on defense, that's just a myth. There's no basis for that, in fact, at all. It's sort of like thinking if a former AFL team wins the Super Bowl, the stock market will do well. People actually believe that, which has more of a statistical probability than the whole presidential thing, by the way, so it's all nonsense. You're going to find good business, and it's good for the economy. The ITR leading indicator is going up. You see that little orange line? Doesn't mean much to you, but man, I'm excited about that, because it shows 2 things. It shows I have no life, and it shows that the economy, let me time-lapse that, down there in the future is going to be doing better. This has a correlation of 0.91, 10 months into the future. It's telling me that later this year, the economy, which includes mining, is going to be picking up, and that we're going to see increased levels of activity across the land. When I look at what it means to you, compare the ITR leading indicator, which is in blue this time, to the wholesale trade industry that is you, it is telling us that that beginning of that orange line moving up is real, that is tied into the leading indicator activity, that you are going to be busier, you're going to like the second half of 2016. When I look at the Purchasing Managers Index, that rising trend says, hey, manufacturing's picking up speed in the second half of 2016. When I look at the ratio of inventories to new orders, which is a prime leading indicator for wholesale distributors, that green line is saying, you know what, you're going to be busier, life is good. So I look at it from manufacturing and general economy. I look at it from wholesale distributors. I have good news. I look at what the Federal Reserve Board looks at. Anything above that black line says the economy is expanding. And so they're looking at the world around us and saying, you know what, life is good. You should do the same, by the way. And then when I look at non-defense capital goods, new orders without aircraft, which is just a fancy way of saying B2B activity, look at the rates of change on top. Those top 2 trend lines, they're moving up. That really milder than normal recession we had, the bottom blue line, has stopped. We have a tentative low. The rates of change are saying, okay, from here on out to the rest of this year, we're going to see this blue line at the bottom move up. You're going to see that we're going to have more B2B activity in the United States. The 3-month moving average, which is that bottom orange line, is going to continue to move up. It's already rising at a normal pace, and I expect it's going to continue. We're forecasting that 2016 will end the year 2.1% above 2015. That mild recession is over with. Good news coming up for 2016. It's going to be even more in 2017. B2B drives a lot of what goes on in this industry, as you can see by the tight correlation between the B2B activity and the wholesale trade of electrical and electronic goods. That blue line starting to move up is not an accident that your orange line has started to move up. And they're both going to continue to rise as we go into the future, which means you're going to be busier as you go into the future. Good news. And on the copper price futures front, we can see that the blue line, which is capital goods, beginning to move up the way it is, means that there's likely to be upward pressure on copper prices too. Nice, tight historical cyclical identity. So not only China providing upward pressure on copper, but the United States providing upward pressure on copper. And as that occurs, it means that it's going to be a slow climb, but it's likely to be a real climb. The 3-month moving average, which is not shown here, has been rising since January 16. It's up a mild but normal 5.7%. But the rate of change is saying it's likely to continue. All the exogenous factors are saying it's likely to continue. As I look around the world, I think it's likely to continue. The trough has occurred on a 3-month moving average basis for copper. You should expect some mild price rise through the rest of this year. Not so that you need to worry about. There's no spike, there's no significant bounce, just the trough has ended. And when a trough in commodities occurs in the metal that has a PhD in economics, that says that the whole world begins to breathe easier. And as commodities in general start to move up, people relax, and equities markets respond favorably. When China starts moving up, another whole segment of the world relaxes, and equities markets respond. And that all means that your world is going to be faced with more yeses than nos. Because when the fear leaves on commodities and the fear leaves on China, that means CFOs and CEOs are going to start saying yes to projects. And as they say yes to projects, it's going to translate into more and more activity for you as you go forward. Employment is also on the rise, and that's the green line. Really quickly, as that's going up, we have more job openings than ever before. We've talked about this in the past. The only thing you're facing now is where you're going to find the help that you need. It's hard to get people to come into the wholesale trade industry. It's hard to get people into manufacturing. It's hard to get kids to want that as a career choice. You're going to have to sell it. Then you're going to have to provide lots of training. And you're going to have to find people with the right attitude and work on the skill set and just hope they stay off drugs. Those are the 3 things that you're going to do as you go forward. You're going to be spending a lot of money on retention, because the big thing in front of you is how you're going to keep those young people and the Gen Xers in the fold. And that's a whole skill set. Your HR person, whether it's inside or outside firm, is going to be so key as you go forward. And you're going to have to spend lots of money on this and try to reduce the turn in those millennials. I was talking to an engineering firm, and an applicant at the engineering firm who got the job offered this as a selling point as to why he should be hired. He said, "I promise you I won't look for another job for at least a year." That was his selling point. Yeah, that's the world we live in. You're going to work hard on this, and that green line is what's telling you that. If you, real quickly, because I hate myths, there's a myth in America that says the economy is so bad and that's why the labor participation rate is so low. That's garbage. The labor participation rate has basically been going down since 1998. So we went through a bust and a boom and a bust, and the rate's still going down. That's a culture issue, not an economic issue. Don't let anybody tell you differently. There's lots of emails that float around that want to use that as a proof text of a bad economy. Look at the whole history and you'll see that it is nonsense. And involuntary part-time employment is at the lowest level on a people basis in over 7 years. So there's lots of jobs out there, good paying jobs as wages are going up. In this industry, wholesale trade employment, we have 5.9 million people in it. We're going to continue to need more and more people as we go forward. The rates of change are telling us a slow and steady growth rate is the future. You're going to be having a hard time bringing in the people you need. Wages are going up. I get really tired of hearing that wages are going down. The only place where wages are going down are for CPAs. So if you have a child who wants to become a CPA, they're still going to do better than they will in other categories, but the pay scale is going down. The starting pay for a CPA, by the way, is a new kid out of college is $55,000. So it's not like they're hurting in any way. But manufacturing, healthcare industry, private industry overall has got a little seasonal thing going on. Wages are going up. I get really irked when I hear politicians say wages are going down and people aren't able to find a job. I think, what land do you live in? This is a land of opportunity still. Little aside, studies have been done. The upward mobility in this country is the same as it was 50 years ago. It has not gotten better, it has not gotten worse. So if your grandparents could make it, your parents could make it, we could make it, our kids can make it too in this country as the result of that study. People tell you there's a ceiling, it's hard to move up, when you're mired in poverty, there's no chance in our economy anymore of getting up. They're lying to you. Studies show the exact opposite. In case you have a kid who can't make it, the upward mobility is better in Canada, so you may want to buy that house in Canada and have them go there. There's a better chance that they will succeed. For any Canadians in the room, I don't know how you do that, but you do that, and you do it very well. And I mentioned that to you before. Consumers are adding debt. It's not a problem now. I'm only bringing it up because I mentioned the recession of 19. And this is an indication that we could have the beginning of a recession building. It's too early for me to be dogmatic about it, but I have an arrow there to show you what's concerning me. If this is the beginning of a downward leg in consumer credit, then the problem goes away. If this is just a break in a longer rising trend, then we are building the next credit bubble. And the next credit bubble will be exacerbated by higher interest rates, which are certainly coming. But right now, it's not a problem. I just wanted you to see that. Our delinquency rates are still very, very low. When we look at our disposable personal income, it's climbing, and when that line goes up, you don't have recessions. I just read in what paper was I reading today? USA Today, which, by the way, is for people challenged by TV guides. So you got to be careful about USA Today as a source of economic news. You know, stick to the Wall Street Journal or other things. But I was reading in USA Today, because I like the fodder, that Macy's is a reason why, wondering, the CFO of Macy's was saying, all these positive things going on, we don't understand why retail sales are going down and where the consumer is, and they're looking for the economy to be the problem. But the problem is Macy's, not the economy. And it was talking about Sports Authority and Aeropostale, so it was cherry-picking some people who are not positioned well in the marketplace anymore. The economy is doing well, consumers are doing well, consumers are going to power this thing forward. Don't let today's headlines make you think something else is going on. This is a great piece of economic news for you. Retail sales, the rates of change are up, the dollar amount's at a record high, we have a nice seasonal trend going on. We take gasoline out of it, we're at an even stronger growth rate. So the consumer is spending. It's Macy's problem, not an economic problem, and that's going to drive demand pull for a whole lot of goods which you're going to benefit from. And you do benefit from it because as I compare the wholesale trade industry that you are in to U.S. retail sales, there is a cyclical identity there. The blue line is retail sales, so as that blue line is starting to move up now, it says yes, we are going to see that orange line also move up, which is consistent with the B2B activity. So I have B2B and I have consumer activity both telling me that I should expect better things for you in the future. So yes, I'm optimistic. I think you're going to have a nice second half of the year and a really good 2017. When I look at the big box and the building material dealers, they just track what retail sales, so they're going to be doing fine. Housing rates of change really positive. Housing down at the bottom, that orange line had a first quarter rise, where normally it's a first quarter decline. Good things going on in housing, good demand pull for a whole lot of products as we go forward. There's going to be a slight slowdown in existing home sales, but it's temporary. Interest rates are still favorable, people have money, and boomers want to have a home, by the way. Let me show you. I think this is extremely important, so I'm going to actually stop here for a second. The gray line, for those of you that are in the back, the gray line bar, those are millennials, Gen X is in the orange, baby boomers are blue. And what this chart is saying to you is that millennials want to get married even more than Gen X people did, which was more than boomers did. And the millennials want to have children just as much as Gen X people wanted to have children. They're just like us. Who knew? It got me to thinking about this whole generational thing. And my kids, all but one of them two of them are late millennials. One's a Gen X, one's a late millennial. The rest are millennials. And it's a struggle sometimes to identify with their thinking. But as I was pondering the issue, I remembered my dad's comment to me when I was young, late teenager. My dad said to me, "You hippie freak, you'll never amount to anything." I'm an economist. How much mainline can you get? I mean, there's nothing hippie freakish about being an economist. I kept the beard to tweak them, by the way, if you're wondering what that's all about. It's a generational thing.